Hello, and welcome back to the channel. I'm Algabot, and this is the place where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're studying a pure price action system called Pivot Engulfing Shield. It uses no traditional indicators at all, no moving averages, no oscillators, just floor pivots, the engulfing candle pattern, and a protective hedge the strategy calls a shield. Over the next few minutes, you'll learn how it reads the market, how it enters and exits, and how the actual code works. Remember, this is educational analysis only. Let's get started. So what exactly does Pivot Engulfing Shield do? At its core, this is a breakout strategy built entirely on raw price action. It watches the floor pivot levels that intraday desks around the world keep an eye on, and it waits for momentum to commit through one of them on a specific candle pattern. There are no indicators involved, no moving averages, no relative strength index, no average true range. Every level it uses is calculated directly from recent price. The strategy works on a single time frame of your choosing. Each time a new bar closes, it looks back over a window of recent bars, 20 by default, and computes three classic pivot levels from the highest high, the lowest low, and the preceding close. Those are the central pivot, an upper pivot, and a lower pivot. These become the reference lines the whole system revolves around. The signal it hunts for is the engulfing candle. A bullish engulfing forms when a down candle is followed by an up candle whose body completely swallows the previous one. That shift of control, happening right as price pushes through an upper pivot, is what the strategy reads as genuine momentum breaking resistance. The mirror image, a bearish engulfing breaking a lower pivot, is read as momentum breaking support. The signature feature is the shield. Breakouts sometimes fail and snap straight back, the classic false break. Instead of simply taking a loss, this strategy opens an opposite hedge leg, the shield, when price travels back across the broken level. From there, both positions are managed together as a basket, and the whole basket is closed once the combined floating result reaches a defined money target, or flattened if it reaches a defined loss ceiling. Who is this style suited for? It's aimed at traders curious about breakout and hedging mechanics on liquid, breakout-prone markets like the major currency pairs or gold on intraday time frames. As always, this is educational information, not financial advice, and trading carries a real risk of loss. Let's walk through the mechanics step by step. Everything begins on a freshly closed bar, and the strategy only looks for a new trade when it is completely flat, holding no positions. First, it builds the pivots. Over the look-back window of bars that precede the signal candle, it finds the highest high and the lowest low, and it takes the preceding bar's close. The central pivot is the average of those three. The upper pivot and lower pivot are then projected out from that center using the range between the high and the low. Because every distance is scaled to that range rather than to a fixed number of pips, the same settings adapt to any symbol or time frame. Next, it inspects the two most recent closed candles for an engulfing pattern. For a long, the earlier candle must be bearish and the latest candle bullish, with the latest body fully engulfing the earlier body. The strategy also checks that this body is dominant. By default, it must be at least half of the candle's full range, so only a committing momentum candle counts. For that long to be valid, the prior candle must have closed at or below an upper pivot, and the new candle must close above it by a small buffer, again a fraction of the range. When all of that lines up, the strategy signals a buy. The short side is the exact mirror. A bearish engulfing candle that closes below a lower pivot by the buffer signals a sell. Now the exits. The base trade is given a fast scalp take profit, set a reward fraction of the range away from entry. The stop loss is parked structurally beyond the shield trigger, so the hedge always engages before that raw stop is reached. While the single base leg is live, if price travels back across the broken level by the shield fraction, the strategy detects a failed break and opens the opposite shield leg. Now both directions are held together as a locked hedge. From that point, money management takes over. The strategy continuously sums the net floating result of every open leg. The moment that total reaches the basket profit target, it closes everything. If instead the combined loss reaches the basket loss ceiling, it flattens everything as a hard backstop. Then it resets and waits for the next clean setup. Let's look at the actual code running inside MetaTrader 5. At the top, you can see the input parameters. PivotLookback sets how many closed bars define the pivots, 20 by default. Breakout frac is how far past the pivot the candle must close. BodyDomFrac controls how dominant the engulfing body must be. ShieldFrac sets the distance back across the level that confirms a failed break, and stop frac, reward frac, and reclaim frac shape the stop, the target, and the shield's own invalidation. Basket TP money and basket SL money are the account currency levels that close the whole basket, and you can also see the spread filter, the lot size, and the magic number. Below the inputs are the two signal blocks. The long block runs when bull engulf and BodyDom are both true. It checks that the prior close sat at or below the upper pivot are 1, or the central pivot as a fallback, and that the current close cleared it by the buffer. When that holds, it computes the shield trigger, the stop below it, and a reward-based take profit, then calls trade.buy with the normalized stop and target. The short block is the mirror. When bear engulf and BodyDom are true and the close breaks the lower pivot S1, or the central pivot as a fallback, by the buffer, it places the stop above the shield trigger, sets the take profit or reward distance below, and calls trade.sell. Both sides are symmetric, and both clamp their stops to the broker's minimum distance. That symmetry is the heart of this strategy. Now let's bring it all together on a chart and watch the strategy work through a long trade and then a short trade. On screen, I've drawn the 3 pivot levels the strategy builds each bar: the central pivot in the middle, the upper pivot above it, and the lower pivot below. These are the reference lines everything revolves around. Look at the first few candles on the left. Price is drifting sideways just under the upper pivot, with small-bodied candles probing toward it but not committing. There's no engulfing pattern yet, and no close beyond the level, so the strategy stays patient and flat. It is simply measuring, recomputing those pivots on every closed bar. Then watch the next candle. It's a bearish candle that ticks down. On its own, nothing special. But the candle right after it opens lower and then drives all the way up, closing with a strong bullish body that completely engulfs the previous candle. This is the bullish engulfing pattern, and crucially, its close finishes above the upper pivot. The prior candle had closed at or below that level, and now momentum has pushed decisively through it. That combination is exactly what the strategy waits for, and you can see the buy entry marker appear right there as the base long leg opens. Notice where the protections sit. The take profit target is projected a reward fraction of the range above the entry. The stop loss is tucked structurally below, beyond the level where a shield would engage. Now we follow the move. The candles after entry push higher in a clean run, body after body stacking upward, price extending well above the upper pivot. A couple of bars later, price reaches the take profit target, and the strategy banks the base trade. That's the textbook outcome. Momentum committed through the level and carried through to the scalp target. Now the market turns, and we get to watch the short side. After topping out, price rolls over and works its way back down, sliding through the upper pivot and the central pivot. Candle by candle, it grinds lower, approaching the lower pivot near the bottom of the screen. Watch how it hovers just above that level for a bar or two. A small bullish candle forms, holding above the lower pivot. The strategy is flat again, waiting exactly as designed. Then comes the mirror signal. The next candle opens slightly higher and then sells off, closing with a strong bearish body that fully engulfs that little bullish candle before it. This is a bearish engulfing, and its close prints below the lower pivot. Support has given way on a committing candle, and the sell entry marker appears as the base short leg opens. Just like before, the take profit target sits a reward fraction of the range below the entry, and the stop is parked above, beyond the shield trigger. From there, price follows through to the downside. The candles after entry close lower and lower, extending the break away from the lower pivot, until price reaches the short take profit target and the strategy closes the trade. Two setups, both built from the same simple idea, an engulfing candle committing through a pivot. And remember the shield we discussed. In both of these examples, the break held and ran straight to target, so no hedge was needed. But if, instead, price had snapped back across the broken level after entry, the strategy would have opened that opposite shield leg and managed the pair as a basket, aiming to recover at the basket level rather than taking the full stop. That defensive layer is what gives the strategy its name. Everything you've seen here is an illustration of the logic, not a prediction. Real markets are far messier, and losses are part of trading. That brings us to the end of our breakdown of Pivot Engulfing Shield. We covered how it builds floor pivots from recent price, how a dominant engulfing candle breaking through a pivot signals a long or a short, how the protective shield hedges a failed break, and how the basket manages every position to a money level. Hopefully the code walkthrough made the inner workings clear. If you found this analysis helpful, please tap the like button, leave a comment with the strategy you'd like me to study next, and subscribe so you don't miss future MetaTrader 5 breakdowns. You can find more educational resources at www.algobot.live. And one more time, everything in this video is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Trade responsibly.